Hello traders, you're welcome to this video. So in this video we are going to be discussing the best settings for the Aroon indicator. Aroon. Aroon indicator. It is a custom indicator, so you would have to download the indicator from a trusted source, and then you can load it on your charts. Okay, add it up on your charts. It's a custom indicator. So the Aroon indicator is actually a nice tool. You can use it to identify trends, the strength of a trend and the potential reversals also. Yeah, because it can give you an insight into whether the market is trending or into the market, or if the market is consolidating. It can give you insights. All right, now we're just going to be looking at some of the um, basic features for this indicator. We're going to be looking at the basic features of this indicator. Now, we're going to be starting with these lines, the yellow line and the blue line. If you notice, you will see that they are opposing each other. When the blue lines are up, the yellow lines are down. We're just using the default settings, okay? So when the blue lines are up and the yellow lines are down, it indicates a sell, right? And when there's this indicator is also ranging from 0 to 100. Okay, so it can help you to gauge momentum. So when you have the blue lines up, and the yellow lines down, it shows that the trend is down. So it is the direction of the yellow that tells you the trend. But then when the yellow and the blue are far apart from each other, it can show a stronger trend. For example, you can see that here the blue and the yellow were not far from each other, and you can see that the trend was not strong. But in this case, when they were far apart from each other, the blue was around 100, the yellow was around 0. You can see that the trend was stronger. Okay, so basically that is how it works. Okay. Now, as for short-term trading, if you are a short-term trader, you might want to adjust the settings, the period. Remember that for short-term trading, the lower value for the period or the lower value is going to be better for short-term trading so that price can react faster. Sorry, indicator can react faster to price movements. But for longer term trading, higher values are better so that the indicators can get smoothened out and you can get a clear direction of the trend. Okay, so we can use periods of 14. The default, we can use the 14 for short-term trading. If you're a scalper, you can just leave it at that 14. And then you will notice that at least price is reacting. And then, of course, you have to go to smaller time frames if you're a scalper. Okay, you can focus on between 1 minute to 15 minutes time frame. And then you watch out for when the yellow line is towards 0. When the yellow line is towards 0 or pointing towards 0, while the blue line is pointing towards 100, you can enter a sell. Whenever you have that cross, when the blue line and the yellow line cross each other, the yellow pointing down, the blue line pointing up, you can use that as a sell signal. Okay, you can see now in this situation again, we can see the yellow was pointing down, the blue was pointing up. We can see the market sold for a bit. Okay, then we can see again in this situation, the yellow was pointing down, the blue was pointing up. See, the market sold for a bit. Here, the yellow was pointing up. This is going to be a bullish signal. The blue was pointing down. After this crossover, you can see the market continued buying for a while. Okay, so now for your scalping strategy, settings of 14 to 20, that is for the value, is okay. Okay, now if you are a day trader, you can also, well, maybe for scalping you can use between 14 to 16. Yeah, because let's not just perform that experiment. 14 to 16 should be okay. Should actually be okay. Let me see, there's no much changes, but there was just a little change so that price can react to the indicator can react to price movement faster. But then for our day trader, 20 should be okay, and then you would have to go to a higher time frame, obviously. So perhaps you can consider 30 minutes, 1 hour. So now you can see that the same strategy applies, the same strategy. When the yellow line is pointing upwards, you can see that from here the yellow line was pointing upwards, the blue was already down. You can see from here when this cross happened, yellow up, blue down, you can see that the market bought all the way up to this point. When you have the reverse signal, you can exit your buy trade. You can set your stop loss below the swing low, take profit at the next resistance level. For a sell, it's just the opposite. Okay, now when you are a swing trader, you can consider setting the period between 20 to 50, but let us just be using 30 for a swing trader. Let us use 30. Okay, now you can go to 4 hours time frame when you are using these settings. Okay, now can you see that when this cross happen, remember you have to wait for this cross to happen. The yellow and the blue line, they should form an X. So when the yellow is pointing down, the blue pointing up, you can enter a sell. This would have been where we enter our sell. Then at this um point we would have entered ourselves somewhere around here, and then we would have exited somewhere around here after the course had happened. Okay, you can use the reverse signal as your exit, and then you can also use support and resistance levels. Remember, just for extra confirmation. Then, if you are a position trader, maybe you are holding trade for months, then you can decide to use value of 100. You can decide to use value of 100. You can use the weekly time frame or the monthly time frame. Okay, but the weekly time frame should be okay. Now we can see that when the yellow was pointing up, the same strategy, it remains the same. After this cross happened, you can see the cross happened around here, right? So the yellow was pointing up, the blue was pointing down. Would have entered the buy here. And remember that the exit signal is when the opposite happens. So we would have ridden this all the way up to this point, right? After this opposing signal happens. So we would have caught about, but this is position trading, so of course it is going to take a long time for that to happen, but it's about 3,350 pips and 3,350 pips. That was a long while anyways. But basically, if you're a position trader, you can use the value of 100, or you can also use 70. Yeah, you can use 70, you can use between that to 100 if you are a position trader. Okay, so basically these are the settings for the different kinds of trading: a scalper, a day trader, swing trader, or position trader. Okay, now some tips for optimization. Remember that your time frames matter depending on the kind of trader that you are. Okay, so the settings may vary depending on the asset class also. For stocks, for forex, for crypto, because volatility also affects the settings. Okay, so for volatile assets, you might want to use shorter periods to catch quicker trends. Okay, for more stable assets, longer periods will be just fine. And it's also important that you combine this indicator with other indicators just for additional confirmation. So you can add on the RSI, moving averages, stochastic oscillators, or any other indicator of your choice. By understanding these settings and signals, you can enhance your ability to spot emerging trends and time your trades more effectively. So I hope you found this video insightful. Kindly like, subscribe, and hit the notification bell so you don't miss out on further updates. Cheers and happy trading.